Good morning, I'm Joe Neighbour from Signal Centre. It's the 22nd of July and I'm talking ball this morning all by myself. No Steve, as mentioned, he's off this week, enjoying himself on annual leave. He'll be back next week and we will have a more comprehensive offering for you at that point. Until then, it'll just be me running through the latest headlines and a selection of charts just to give you an update on how we are seeing things from a technical perspective at the moment. And again, the latest headlines. So let's get cracking on. The ECB's first policy announcement after raising its inflation target to 2% is due, and investors will want to know what that means for interest rates and also bond purchases. President Christine Lagarde has hyped the July meeting, which was used to mark the start of the summer lull for many traders, by promising interesting variations and changes. With the debate on whether inflation is transitory is still raging, and the ECB remains well behind its major peers in terms of reining in its stimulus program. So all eyes on that. The rate decision is at 12:45 today, but more importantly, the press conference is at 1:30. So we'll wait and see what comments come out of that and whether or not it does have an impact on markets today. In terms of what's going on with inflation, obviously this remains a key story at the moment. Companies are starting to feel the impacts of rising prices. The chief executive of Stellantis, who are the company that make Jeep, they are being affected by higher raw material costs. And also that's being felt across the industry from Daimler and also paint maker AkzoNobel. Some economists and policymakers doubt that inflation's here to stay, but obviously this continues to persist as a story, so we will obviously have to wait and see. In terms of what's going on in the crypto space, Bitcoin managed to bounce quite nicely from the 30,000 level, very much on the front foot yesterday. It's a bit flat today, but we'll come on to the charts on that shortly. And even after the UK has dropped most of its restrictions on daily life, employees returning to London still remains quite elusive, according to a latest report. The comments come as crowds are still quite sparse. And while some would want a pay rise equal to the cost of the train travel to go back to the office full time, there are still going to be a few stumbling blocks before we get back to full normality, I would say. So let's get stuck into the charts. I'm starting off on the FX side of things today. I'm going to start with dollar index. So this has been on a really nice rise higher, but yesterday we saw some signs of some cracks appearing. This is yesterday's candle that was posted, and what we can see here is a bearish outside day candle. So what that essentially means is we've gone on to make new highs. So we posted a new high above the high made on the 20th of July, but we actually closed below the low of the previous day. So we've engulfed all of the previous day's price action. We've gone on to make new highs, but end up making new lows. And this comes bang in line with this red line here, which is a key resistance level. It's a gap. It's just been filled between the 5th and the 6th of April. That's when it was created. And we've seen some selling take shape. So we are trading within this kind of narrowing channel here, as you can see. So maybe we will see a dip down to the lower end. If this breaks, then we could see a deeper correction and some of the froth come off the top of this dollar position in the short term. So interesting move yesterday. Whether or not the selling will be backed up today, we'll have to wait and see. There are a few talking points and events throughout the trading session which could have a say on that. So what has that done for euro dollar? Just taking a quick look at that chart here. So as anyone who's been watching this regularly will know, I've been talking about this head and shoulders top pattern on euro dollar for some time. We haven't really done enough of a job to actually confirm the pattern. This blue line down here represents quite a big level of support at 117.81, and we continue to hold above it. Yeah, we saw a minor close below it on a couple of occasions, but certainly not enough to get us panicked. So yesterday we don't have the sort of outside bullish candle that we saw on the flip side of this on the dollar index chart, but clearly there is some support here and the bulls are trying to defend this level. So while that's still the case, there is potential for a corrective bounce to the upside in euro dollar, and certainly from a speculative risk rewards perspective, buying around about this level with a stop below these lows down here at sort of 117.50 probably represents, decent risk reward opportunities on the upside in the very short term. The key levels remain, it was at sort of 117.81 on a sort of closing basis, but I guess now we can drop that down to that swing low that we posted yesterday at 117.51. Below that, the key level I'm really watching for is at 117.04. This is the swing low from the 30th of March. If that's taken out, then I think we can confirm that this head and shoulders top pattern has played out, and we can expect lower prices over the medium term. But it's not straightforward. We are going to continue to see choppy price action in both directions, which will, of course, make trading all that more difficult. Okay, looking at cable. So this broke down through what I'm calling a double top. First top here, second top here, broken down through this neckline, closed below it on the 20th of July, rallied back above it yesterday quite convincingly and on some strong volume as well. So that looks pretty strong. We're backing that up today with further gains. How much upside has this got? Not entirely sure. I mean, the momentum at the moment is quite bearish. If we just draw this on as a sort of short-term trend line, there is scope for it to rally somewhere up towards these kind of levels before the sellers maybe step in again. Certainly not straightforward, but I feel that this is topping out, and it is just a case of selling into rallies in the short term. So be careful with that in the short term. What else have we got? So some of these Aussie currencies have obviously broke down quite convincingly. This is Aussie yen, which broken down through this range. As you can see here, there's a cluster of resistance levels now that have formed between 81.97 to 82.28. I expect any rally to be capped in and around this zone, and that should provide opportunities to sell in the short term. So potentially a bit more upside in the very short term before sellers step in, and ultimately the target on this is down at 79.16. Anything else? So euro yen, this is bouncing back as well, but again momentum remains quite bearish. Plenty of room for a bit of a correction to the upside, but again I think it will just be a case of selling into rallies with that. Going to keep it quite brief on the FX today and move on elsewhere. There's a big old move in oil yesterday, and that came pretty much in line with the support level that we mentioned yesterday, which has come in between 65.10 to 66.41. Pretty much stopped the sellers dead in their tracks, and we have seen this bounce higher. So again, I'm kind of thinking that we're going to see some sort of consolidation in the short term. I'm not sure we're going to get really back up to the highs and continue this trend higher just yet. I think it might be a little bit more complicated than that. So I'm looking for resistance at around sort of 73.13 to potentially do a job, kind of the underside of this broken channel. But we'll have to wait and see. Certainly it's had a really good move to the upside yesterday. The volumes weren't as strong on the buying. The volume was stronger on the initial move lower, so that may be telling. But ultimately, I don't think there's much, from a risk reward perspective to be gained on that one in the very short term. If we look at gold, that's really not doing an awful lot. So this is the daily chart. We're trading within this channel. We've seen a little bit of a bounce higher. We do have resistance a bit higher at 18.44. So while we're below that, I think there is scope for more moves to the downside. But again, trading is going to be pretty choppy, and I think opportunities will be limited on gold in the very short term. Flipping over to Bitcoin. So this had a really good day yesterday, and it comes bang in line with this support level that we've got at 30,000. 30,000 is highlighted by this blue level on the chart. Below that, I've got a band of support between 27,175 to 29,121, and that's done a really good job of supporting the price. A little bit of an uptick in volume yesterday, nothing huge. But if we can break out of this sort of short-term downtrend here, then there is potential for a continuation to the upside in the very short term. I'm not saying that this is the bottom for Bitcoin, because looking at this sort of rounding top pattern, there is potential for lower prices. But in the short term, there is scope maybe for higher prices if we can break out of this short-term downtrend. In terms of where I think any rally could head to, the initial targets for me would be this previous swing high that we posted back in June, so up to sort of 41,300-ish, and maybe we'll range and consolidate within that level or this range. If this is indeed a range that's forming between sort of 30,000 to 41,000, then there will be opportunities to trade that in the short to medium term. So good luck if that is your tipple. Moving on to indices. Strong bounce back yesterday in indices, coming off the back of gains in the previous session as well. For FTSE, I was expecting there to be some sort of rounding formation, which we've seen here over recent weeks. Broke down through this support level at 69.47. I expected that to cap any advances to the upside, but the buying has been pretty strong. Maybe a bit of an overshoot, I'm not sure, but I still feel that I'd like to see a corrective move down to this 38.2% fib level at 65.58, just because I think it needs to create some value for investors at the moment. While it's up at these kind of levels, it's difficult for investors to want to buy, I think, at these levels, because there is a lack of value. If there is a decent sort of correction within a longer term uptrend, then that will offer some good opportunities, I think. So not entirely sure what to make of this at the moment. Still think that maybe upside is limited, so I'd be looking for opportunities to sell that on a speculative basis, and certainly from an investing stance, I'd be looking to buy stocks at lower prices, potentially on the UK side of things. Similar situation for DAX. We broke down through this sort of tiny range below 15,278, expected that to bring with it further selling, again down to this 38.2% level at 14,100. We need to see some sort of correction in these markets at some point, as I said, to create that value. But DAX doesn't seem interested. It's rallying back pretty strongly. It's actually not that far away from the previous highs at around about 15,800. So it looks pretty strong for now. So I guess we can see this was maybe just a bit of a trapping in a few sellers who are a bit jittery maybe, but the buyers have come back and defended it. So taking a look at the NASDAQ. So we did see a break of trend on NASDAQ, and this was back on the 16th of July. Again, that from a technical stance, you would have thought that maybe was going to lead to some sort of corrective move to the downside. That hasn't occurred. The buyers have come back. We've got this all-time high now at just over 15,000. If we are going to hit that today, that's pretty much bang in line with the reverse side of that broken trend line. So is that going to act as a bit of short-term resistance? Certainly, maybe, but overall the trend clearly is very strong. And we do have earnings out from some big names next week. So for now, looks like the buyers are very much in control. Finally, S&P 500, because this is the broadest index in the US and a kind of a good barometer for where we are on the US side of things. All looking pretty rosy, still remains above trend support. Yes, we had that dip back, but the buyers have stepped in, and it looks like we're going to go and challenge those all-time highs yet again. So all looking pretty good in general on the US side of things. Okay, gun to the head trades. So every day, Steve and myself, and obviously when Steve's not here, we continue this. We pick a trade live on the show where we feel there is opportunities to make money. Assuming that we've got a gun to our head, we have to make a call pretty quickly and without much research into these ideas. So obviously they are speculative in nature. Yesterday I tried to sell DAX, didn't work out, as I've just talked about on the charts. It worked out pretty nicely on the upside and continued to move higher, so I got stopped out for a 1-hour loss. So what am I going to look at today? Again, not really had any chance to take a look through these charts, so I'm just going to try and flick through some bits and pieces live on the show now. And when I'm looking for these sort of opportunities, I'm just really looking on the short-term charts, on the hourlies, to try and find some interesting kind of candle setups, really, some reversal candles that I can maybe try and jump on the back of. And let's have a quick look through some FX markets to see if there's anything that takes my fancy. Obviously been doing this for a long time, so when I do see something that sort of sticks out, it is pretty obvious pretty quickly, and I will let you know if I do see anything. But please bear with me while I try and find an idea today. Nothing yet, or maybe look at cable. Okay, Right, let's take a look at this. So what immediately caught my attention here is this candle here that was posted between 8 and 9 this morning. And I'll just zoom in so you can see that. So we've gone on to make a high at 137.80, sorry, 137.58, but we've reversed and we formed a bit of a shooting star candle. And that's obviously on the back of a pretty sharp move higher. So does that sort of signal the end of this move in the short term? But what I'd also do here is just take a quick look at the fib levels from the recent swing high to the swing low to see if there's anything in and around this level that can catch my attention. Okay, so we've got a 50% level there in blue. From this swing high that we posted on the 12th of July down to these swing lows that we posted on the 20th. We've rallied to the 50% level of this move and we've posted that shooting star candle. So let's have a look at that, shall we? Let's sell that now. So we're currently trading at 137.43. I'm going to place a stop loss at 137.72. And I'm going to target a move all the way back to these swing lows. Why not? So targeting 135.72, looking for 5.75 R on that one today. As I said, highly speculative. Just come up with that very quickly, just to try and sort of further justify it. There are some swing lows here which we rallied into quite nicely as well. And if we look at the daily chart, as I talked about earlier, I'm sort of the opinion this has completed a double top pattern. Top one, top two, neckline, broken through, closed below it. Yes, we rallied back quite substantially over the last couple of days, but we may see some sellers step in here pretty soon to again send this lower. Ultimate targets down on this are at 130.97. So we'll see what happens on an intraday basis on that one today. Okay, what's going to move markets today? Well, I talked about a few things that we need to keep an eye out for. First up at 12:45 p.m. UK time is the ECB rate decision. No change in rates or policy expected, but there is going to be a focus on potential tapering of assets, which may prompt some volatility in Eurozone stocks and in the euro currency. That press conference starts at 1:30. So keep your wits about you if you are active and involved in the market around about that time. Also at 1:30, we have US initial jobless claims and also the Chicago Fed index. Claims are expected to fall to 320,000, while the Chicago Fed increases to 0.45. At 3 p.m, we have Eurozone consumer confidence. So really quite a busy day for all things Euro linked. Is expected to fall to -4.2. And then also at 3 p.m, we have US existing home sales, which are expected to fall 0.3% month on month. Aside from all those macroeconomic events, earnings season continues in the US. We've got earnings today from Twitter, AT&T and American Airlines. So plenty going on. Be careful if you are trading. Good luck today, and I will be back tomorrow morning. Trade safe, everybody. Cheers.